Okay, so hey guys, I'm going to do a trade review on the 21st of July. Okay, so for this trade, it was taken during my break time during work. Okay, it's just a very small scalp, so let's get right into it. So initially, I was seeing this 4-hour rejection block as a draw liquidity. Why? Okay, because we have been marching higher. Okay, you can see right here. Can you see right here? We are really close to it. So when it's around the upper 25%, I'll expect price to start moving towards it. Okay, so I'm submitting to the higher time frame context. Okay, so we have gone up a long way. Okay, so right here is a current new week opening gap. We did not reach it. Okay, we did not reach it, and then we start expanding higher. So I'm thinking that we are really bullish. Okay. Okay, and right here we have a 15-minute rejection block, which I take my profits right there. Okay, so right here, and price started expanding higher. Okay. So I'm waiting for fair value gap to form, and then I'm going to go long. Okay, right here I enter my live account and I went long. Okay, so 15 ticks stop loss, very good one. Okay, the risk allows me, and I'm very comfortable taking this kind of trade. Okay, because the risk is really small. So 2:50 AM macro now, so I'm going to see whether it delivers or not. Okay, with hindsight, I lost this trade. Okay, but no problem, I'm going to wait. Okay, at this point, the reason that I lost, I would say like with hindsight, right? Always wait for price to retrace down to a discount first. Okay, so for example, like right here, I could wait for price to did a stop rate like that, and or even retrace down to a discount, because price actually reached for discount first, then only it started moving higher. Okay, so you can see this 550 minutes BC here. So price is retracing to it. So what I'm seeing is how does price react off it. Okay, and now I drew out the dealing range. So at this point, there's the dealing range here. So I'm just measuring how does price react to that 15-minute BC, and you can see now it's a very nice down movement. Okay, so I'm drawing out the wicks. So why I draw these wicks? Remember, this level is the 15-minute wicks CE. I want to see price start getting above it and use it to send price higher after retracing to a discount. So the discount is here, this 50% level. Okay. Okay, nice. You can see this nice drop lower. This can be the Judas swing, and I'm seeing for higher price submitting to a higher time frame. Wait for short-term low validated here, so we can actually start pumping higher. But always, I'm still waiting. Okay, it's the macro time. Macro time is when the PD arrays are really sensitive to price, and currently we have reached for that 50%, which is the equilibrium point, and you can see. So I'm waiting for a 5-minute low to form. Okay, but at this point, you can see the 5-minute, we did make that middle, the second candle of the low. Okay, so I'm thinking, okay, I'm thinking for this 5-minute candle to close first. Okay, so do we form a low? But right here actually is very nice. This can be an order block. Okay, so now I'm measuring, does price still show reluctance on moving lower? Okay, but you can see price move lower some more, so which means what? It's a good call not to go long. Okay, I'm still waiting. Okay, now currently this new flip is on the 50 minutes BC, so I'm seeing the 75%. Does price want to reach for 75%? Okay, and now we at the lower quad. So at this point, I want to see price start showing real movement upwards. Okay, do we close in that CB? Okay, yeah, do we start consolidating? So it's very important to be patient. Okay, at this point we touched that 75%. Okay, but we now even touch the low of that 15 minutes BC. Okay, nice wicks. Okay, nice. I'm seeing that market structure shift. Okay, why? You can see price has been constantly moving lower, the lower buy side, sell side, sell side, sell side rated, so all the way here down, and then we just touched off that low of that 15 BC, and then we expanded higher, bullish market structure shift. Okay, so I'm going long, expecting this to be a breakaway gap. That's why I went long there. Okay. Okay, you see a fair value gap form, we did enter it, but sometimes it will not. When it doesn't, then it's a very bullish sign. Okay, but this, if it's going to be a pyramid, can enter again, but I'm not going to pyramid definitely. Okay, I could have taken another trade. Okay, it's just 31 ticks, but no. Okay, I don't want to put myself in a position, okay, that I feel that I need to manage more, because first of all, this is at my work. Okay, so I don't want. And now I want to see price start expanding higher. Okay, nice expansion higher. I'm still allowing for price to just touch here, but as long as body tells me the story that we still want to move higher, I'm okay. So right here, I'm seeing this as a market structure shift again, which means what? I don't want to see price take or start showing me big. I want to see price start showing me reluctance of moving lower, just submitting to price action. Okay, at this point, like I say, when we are around the 25%, like from here to here, we are above the 25%. I want to see price spiking up now. Okay, so I don't want to see price hovering around anymore. I want to see price start spiking up. Okay, now the risk is already decreased by a lot, so yeah, just submitting to the trade. Okay, CB supported price here. Okay, it's a 1 minute CB. You can see this CB supporting price extend to the right. Okay, nice expansion higher. Why did I close my trade? Because generally, based on my experience, when this happens, it's a now or never condition. Okay, it's either going to spike lower and stop me out, or I'm going to back my profits. And I'm just going to back my profit definitely. It offered around 17 handles. It covered my first trade, which is a loss. So it's a perfect trade, and it's already close to my break time. So when you have something to do, you better just close the trade. Okay, so a very good trade for me. And yeah, that's it for this trade review. See you guys in the next one.